Many healthcare stocks in the United States are taking a beating given the increased regulatory attention from the United States. In that sense, I've seen healthcare stocks become significantly undervalued. And in this video, I'm going to identify 3 undervalued healthcare stocks I think you can buy at current market prices. And then I'm going to share with you some details about the companies that makes them attractive investments, in my opinion. It's a lot to cover in a short video, so let's jump right into it after a brief message from my sponsor.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so the 3 undervalued healthcare stocks I'm going to recommend in this video is Eli Lilly, trading at a forward price to earnings of 27, near the lower end of where this stock has traded for, according to this valuation metric, going all the way back to 2024. Novo Nordisk, which is trading at a forward price to earnings of just 15, near the lower end of where this stock has traded for, according to this valuation metric, also going all the way back to 2024. And last but not least, Pfizer, trading at a forward price to earnings of just 8.5, especially after today's news with the current administration is blaming Pfizer and other vaccine providers for poor health outcomes. And so all 3 of these healthcare stocks trading at relatively low valuations. And I think that's an opportunity for long-term investors to buy at these lower valuations. Now, looking at these companies' revenue growth over the previous decade, they've all generated growth in some degree. Pfizer has increased its revenue from 49 billion all the way up to 64 billion. Of course, Pfizer, you can see that big spike in revenue in 2020 because of the COVID vaccine and COVID treatments. And since then, its revenues had crashed as demand for the COVID vaccine and COVID treatments have declined considerably. Meanwhile, Eli Lilly and Novo Nordisk have each demonstrated excellent revenue growth, much better than Pfizer because of the recent weight loss and diabetes treatments. And that's only going to continue as the companies are on the precipice of launching an oral pill version of their weight loss drugs. These two have increased their revenue at a compounded annual growth rate of 11% for Eli Lilly and 12.8% for Novo Nordisk. Perhaps more impressively is the operating profit margins of these healthcare companies. Novo Nordisk boasts an operating profit margin of 48%. That's up from 43% and is among the leaders in operating profit margins of any company that I follow. The best of the best in this category is around 65%, and that's Visa of all of the companies that I'm following. So at 48%, Novo Nordisk is in striking distance of that best-in-class operating profit margin and is certainly in the top tier of operating profit margins of all companies. Similarly, Eli Lilly has expanded its operating margins to 43%, up from 18% in 2015, and that continues increasing as the company has, and Novo Nordisk for that matter, have increased their manufacturing scale to be able to produce their weight loss treatments at a lower cost per unit, which allows greater efficiencies and scale and opens more market opportunity because they can sell these treatments at lower prices. Pfizer, meanwhile, hasn't demonstrated the kind of growth as Eli Lilly and Novo Nordisk. Of course, Pfizer had its moment during the pandemic and its operating margins surged close to 40% and then collapsed, of course, as demand for COVID treatments fell. But its operating margin now at 28% is where it was in 2015. So it's not like its operating margins are significantly lower than they were before the pandemic. They're right about where they were. And with healthcare companies, what you're getting is not just their current treatments available in the market. What you're getting is a company that's demonstrated an ability to research and develop and find treatments, right? Because you're not just investing in these companies for these next 1 to 2 months or 1 to 2 years. You're investing in these companies for the long term. And in the long term, there's going to be the need to develop new treatments. And these companies, all 3 of them, have demonstrated an ability to find and research and develop and create new treatments that generate great revenue and profitability for long-term investors. Similarly, these companies have generated solid returns on invested capital. Eli Lilly and Novo Nordisk, of course, better than Pfizer, with returns on investor capital at around 30%, and Pfizer with a return on invested capital of 9.3%. Of course, Pfizer is trading at the cheapest valuation of these three, and the lower return on invested capital and the lower operating profit margin and the lower revenue growth are reasons why this stock is trading at the cheapest valuation among these three. But all three of them, I think, are selling at attractive valuations given their prospects, given the profitability, and given the valuation. I think healthcare stocks are beaten down right now, and it's a good time to start searching through some of these companies to find bargains for long-term investors. And I think Pfizer, Eli Lilly, and Novo Nordisk could be three excellent additions to your portfolio. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.